Every cycle in crypto starts with the same question. Is this the moment? Is this the time when Bitcoin finally breaks out of its halving rhythm and becomes something bigger, something unstoppable, something that doesn't just rise and fall every 4 years but builds into a supercycle that redefines finance entirely? For years, people have talked about it. The idea that one day the halving-driven boom and bust would give way to a continuous wave of adoption so strong that the old patterns simply wouldn't hold. And now, as we head toward 2026, that question is back on the table. If you've been in this market long enough, you know the rhythm. In 2013, Bitcoin went parabolic for the first time, peaking around $1,000 before collapsing into the wilderness. In 2017, it did it again, racing to 20,000 before crashing back. In 2021, the story repeated at 69,000. Each cycle bigger than the last, but always ending the same way, with the brutal bear market that shakes out the weak hands. These were the halving cycles at work, where supply cuts drive price higher, greed kicks in, and eventually the market overheats. But the idea of a supercycle challenges that. It says that one day, structural adoption, institutional inflows, and macro forces could push Bitcoin and crypto into a sustained rally that doesn't collapse back to the old levels. That the boom and bust pattern could break. So why 2026? Why is this the year people are pointing to as the potential start of something new? To answer that, we have to look at what's happening in 3 places at once. First, on Wall Street, where ETFs and stablecoins are rewriting the rules of access. Second, on the streets of emerging markets, where people are using Bitcoin not as a trade, but as survival finance. And third, in the global macro system, where debt, inflation, and liquidity are shifting in ways that could supercharge crypto rather than kill it. Put those together, and you get a picture of why 2026 could be the cycle that finally breaks the mold. On the institutional side, the shift is undeniable. In 2025, the SEC made a decision that might look technical, but is anything but. By cutting the approval time for crypto ETFs from 270 days to 75, it opened the floodgates. Bitcoin ETFs have already proven their power, bringing billions of dollars into the market earlier in the year. Ethereum ETFs are next in line. But the new rules mean we could soon see ETFs for Solana, XRP, Cardano, maybe even baskets of altcoins. What that does is change who owns these assets. It's no longer just traders on exchanges. It's pension funds, retirement accounts, institutional allocators who would never touch a crypto wallet. That's sticky capital. That's not money that comes in for a week and leaves on the next red candle. That's long-term allocation. And that's the kind of flow that could underpin a supercycle. At the same time, stablecoins are becoming the invisible giant of this market. Tether's plan to raise $20 billion at a valuation of $500 billion is staggering. It signals that the plumbing of crypto is being valued like the biggest banks. Stablecoins aren't just a trading tool anymore. They're becoming the dollar of the digital age, used for remittances, savings, payments, and trading around the world. If Tether cements its dominance with that kind of war chest, and if rivals like Circle and PayPal push harder into regulated markets, stablecoin liquidity will be deeper than ever. That liquidity is what allows ETFs to function, what allows exchanges to thrive, what allows adoption to spread. It's the lifeblood. And if that lifeblood is getting stronger, it supports the case for a rally that doesn't fade away as quickly as past cycles. But the supercycle story isn't just about Wall Street and liquidity pipes. It's also about the grassroots. Because while institutions are building products, people in places like Kenya, Argentina, Nigeria, and Turkey are using Bitcoin to survive. In Kibera, Nairobi's largest slum, people are learning to use Bitcoin wallets on cheap smartphones. They're paying for groceries, garbage collection, and services, not because they want to speculate, but because the old systems don't work. Mobile money fees eat away at small transactions. Banks are out of reach. Bitcoin, for all its volatility, is cheaper and more accessible. This is Bitcoin as survival finance. The same story is playing out elsewhere. In Argentina, Inflation has destroyed the peso, and people are turning to stablecoins and Bitcoin to preserve value. In Nigeria, capital controls make it hard to move money across borders, but crypto is a lifeline. In Turkey, citizens use stablecoins to escape lira devaluation. These aren't traders chasing the next breakout. These are ordinary people using crypto because it's the best option they have. That kind of adoption doesn't vanish in a bear market. It builds resilience. It creates a base of demand that isn't driven by speculation but by necessity. And that base is what makes a supercycle possible. Then there's the macro backdrop. In past cycles, tightening killed rallies. When the Fed raised rates aggressively in 2022, crypto collapsed alongside stocks and bonds. But the picture heading into 2026 looks different. Global debt levels are so high that central banks are boxed in. The US can't sustain high rates without blowing up its own balance sheet. Europe is facing the same problem. That means liquidity has to flow. Rate cuts are already back on the table. Stimulus isn't going away. And every time liquidity floods the system, assets that thrive on liquidity, like crypto, explode higher. The difference now is that crypto is no longer a fringe play. It has ETFs, stablecoins, real-world adoption. It's positioned to catch that liquidity wave more effectively than ever. Combine those three forces: institutional pipes, grassroots adoption, and macro liquidity. And you see why people are whispering about a supercycle. Not just another boom followed by another bust, but a sustained period where crypto embeds itself deeper into the financial system and society at large. Where corrections happen, sure, but they don't wipe out 90% of gains. Where the trend is up, relentlessly, because the base of demand is so wide and so deep. Of course, the supercycle isn't guaranteed. There are risks. Regulation could turn harsh. If ETF inflows turn to outflows, momentum could stall. If a global credit crunch emerges, liquidity could evaporate again. And hype always brings danger. If too many people believe in the supercycle too early, the market could set itself up for another brutal crash. But even acknowledging those risks, the setup for 2026 looks different. It looks bigger. It looks more durable. Think about Bitcoin itself. In 2013, it peaked at $1,000. In 2017, $20,000. In 2021, $69,000. Each time the gains were exponential, but each time the fall was brutal. If 2026 plays out differently, Bitcoin could break into six figures and stay there. Not just touch it, but hold it, consolidate, and build from there. Ethereum could prove its dominance as the base layer of decentralized finance, with ETFs bringing mainstream adoption. Solana could cement its comeback story, evolving from the dead chain of 2022 to one of the leading networks of 2026. XRP, freed from its legal shackles, could carve out a real role in global payments. These aren't just speculative hopes anymore. They're tied to infrastructure, regulation, and adoption that are already in motion. So when people talk about the next supercycle, they're not just dreaming. They're looking at a confluence of forces that have never aligned like this before. Wall Street opening its doors, stablecoins becoming digital dollars, grassroots adoption spreading through emerging markets, and central banks forced into liquidity by their own debt. That's the recipe. That's the setup. That's why 2026 feels different. The question isn't whether we'll see another rally. We will. The question is whether this rally will look like the ones before, or whether it will mark the moment when crypto stops being a 4-year boom-bust story and becomes a structural, unstoppable trend. Nobody can know for sure. But if you step back and look at the pieces, you can see why people are asking the question with more seriousness than ever before. Every cycle has been bigger than the last. But maybe, just maybe, the next one won't just be bigger. Maybe it will be different. Maybe it will be the supercycle. But either way, we will see you at the top.